Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, November 28th, 5:04 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the November 1st and 2nd follow-through days on the NASDAQ 100 and S&P 500. Checking the trend gauge over here in the upper right of your screen, you can see we've got the green arrow on for market leadership. Those continue to be plentiful and acting fine. Then take a look at the 5 major indexes across 3 time frames. Short term, all 5 of the major indexes trending above the 21-day exponential moving average. That's a green arrow. Also above the medium-term 50-day moving average. That's a green arrow. Mixed bag versus the 200-day moving average. Small caps cannot get above. Mid caps above now for about a week and a half, but still the slope of the line trending lower. Ideally, we want them all above the 200 and the slope of the line heading up. So what happened today? Day 5 of tight range trading. Both bulls and bears tested today. The market teased a breakout and a breakdown. Small and mid caps lagged. Here are the numbers on the day. Big 7 led by Tesla up 4.5%, up an average of 0.92%. Our 8 growth ETF composite, the RG8, down 0.13%. S&P 500 opened down 0.1%, closed up 0.1%, while the equal weighted RSP was down just 0.1%. NASDAQ 100 strengthened as the day went along, up 0.26%. Equal weighted up also 0.16%. Dow up 0.25%. Here are the laggards. Mid caps down 0.7. Russell 2000 small caps down 0.5%. But off the lows, we bounced again at the 8 EMA on the Russell 2000, which is what we need to hold to keep the uptrend intact on a short-term basis anyway. Global 60/40 stock and bond up 0.25%. Both stocks and bonds contributing to that today. Mostly bonds, though, as yields pulled back. In-house GROTECTION up 0.32%. Let's get to charts and then the tail of the tape. Here's the S&P 500. Let's go to a 10-minute chart here today. No, I don't like that. That's too choppy. Let's go to a 15. All right, so we've been drawing lines talking about the tight trading range that we're in. Here was the breakout day, 1 day of a pullback, and then we made a higher high early. That higher high early on the 22nd, that higher high gave way immediately. Something only holds for 20 minutes. It's very clearly a failed breakout. Also failed to break higher earlier in that day. So really our line is drawn at about 45.65-ish here. We did pop up and test that 45.68 today after the gap down. And this was, let's go to a 5-minute chart. One of the most hawkish Fed speakers, Waller is his name, said if inflation continues to come down, we really need to look into trimming rates. And the market usually don't hear that out of a hawk like that. And the market popped higher, rested, popped higher again, but ran into that 45.68 level where we're in this consolidation. And that's it. That's as high as it went. And then at 1 o'clock Eastern time, let's go back to the 5-minute chart. We had what was perceived as a weak bond auction, which broke the indexes toward the lows of the day, but they recovered very nicely. Even more importantly, let's take a look at the IEF here. This is the 7 to 10 year T-bond prices. Here's the shakeout here right after 1 o'clock Eastern time, but the prices went down and then rallied into the close, which means yield did the complete opposite. Here's a 5-year. That's not what was auctioned, but we'll show it. So here at 1 o'clock, here's the yield popping and then selling off into the close. So that's a benefit to stock bulls, and we'll continue to be on the lookout for that continuing. So now the NASDAQ 100, you can see continuing tight action near the top of this Flat base breakout around 388. Let's go to the 15-minute chart here again today on this, and we tested a breakdown in this tight range that we've been in. So you can see again the false breakout here above 391.50. Here's the move up. Here's the gap down, gap up, tight range, broke below it twice, but bulls showed up. So here we're testing bears to the downside of the range to see if they're going to win. They didn't, as opposed to on the S&P 500 where we tested the top of the range and bulls failed. So a little bit for everybody today. Bulls tested, bears tested. Net, we're still in a 5-day tight range after moving out on the 20th. I believe it was the 20th. Yes, the 20th. Let's go to the Dow Jones Industrial Average. Continues higher, making higher highs and showing relative strength, up 0.25% today, coming into the highs that were made back in July now at the 35,700 level. Mid caps closed right at the ADMA on a pullback down 0.6% today, still holding above the 200-day moving average. Small caps gap down, rallied, pulled back, but holding the 8 EMA. This is a 1, 2, 3, 4, 5, 6, 7-day tight range on small caps here. So we're coiling for a move. The question, of course, is which way is the move going to break? The more times the downside is tested, it weakens, but if it doesn't break, it acts more like a callus than a broken blister. So important that this 45.25, really that's kind of looking more like a shakeout now. Today's low 45.40ish. So a tight range between 45.25 and 45.40, and then on the upside 45.68 is where we need to break above on the S&P 500. Let's go to the VIX now. VIX unchanged on the day. Big tail on the VIX here. Let's go to a 5-minute chart and see what was going on. Well, that's okay. That spike is, look, 105. That's when that bond auction happened, that 7-year bond auction that was perceived as weak. Huge spike up in the VIX, but lasted 5 minutes before coming back down. Let's see if that could have been a bad print on the chart. Nope, it's over the course of a couple of minutes. So not a big spike up and then spike down. So we're below that 15 level. In fact, all the way down with a 12 handle. That's where the markets have done their best work this year. Let's go to the dollar. Dollar continues to make lower lows. That's a headwind for stocks, a tailwind for stocks, but also the big beneficiary today in this was gold and silver, and stocks. GLD up 1.33%. That's not how we're playing it though. Here's GDX up 4.8%. That's not how we're playing it though. We're playing it. Let me show silver first. All three firmly up 1.6%. We're playing it with NUGT, which is a leveraged gold 2 times. Still below the 200-day moving average, but if you look at GDX, always look at the chart of the underlying, not the chart of the derivative. You can see GDX up 4.8, but Nugget up 10.6. So that's part of the heading or the title in tonight's video is how to decide between a sector ETF and a stock, and I'll talk about that when we get to the tail of the tape. Let's move on to bonds now. Well, no, let's move on to Bitcoin, which had a disappointing day yesterday, but a strong day today. New closing highs here above the 38,000 level. Is Bitcoin up 4.6%? Bonds now, BND up 0.42%, TLT up less, but still up 0.20%. Price up means yields down. There's the TYX making lower lows on prices right above 4.5, and the TNX down 1.2%, making lower lows well below the 4.5 level now. All right, so let's get to the tail of the tape. You can pause this. VIX unchanged, fear and greed unchanged. The Fed, hawk, Waller hints at cuts. We talked about the 7-year auction being weak. That was a spike up on stocks and then a spike down, but decent close. Bitcoin, gold, silver stocks strong, software strong, real estate strong. On the downside, semiconductors, because Micron issued a guidance that was not well taken, and that really hit the semiconductor equipment stocks, trickled over to the semiconductor sector as a whole. ITB down a bit, and XLV Healthcare down also from a portfolio standpoint. Oh, I do want to note S&P average true range, right in sync with what the VIX is telling us, broke below a percent. This peaked at 1.3% when we were during the third wave of the sell-off now, but volatility down is bullish for stocks. We sold DraftKings. DraftKings a gap down at the open on heavy volume. Didn't see any news, but we got back right to our break-even point, and once we had mid single digit gains on it, and we just don't let something up that much go to red. So it ended up looking like it's a shakeout for us, but as it reclaimed the 8 by the end of the day. But once we hit our break even, we were stopped out. So out of DraftKings now, but we did buy PDD. Big volume gap up 308% above average volume. Gapped up, we bought right at about 139, and then it just stayed tight for the rest of the day, not giving anything back. But not breaking out either. So 140, a pretty key level. If you look at a weekly chart on this, not quite at all-time highs, but the most recent highs are all the way back in 2021. Yes, this is a Chinese stock, but it's their Temu site, which has become very popular in the US, that's driving the growth. 89% above average, or 89% up on sales, 31% up on earnings. It had been a leading stock, shaping up just fine, gapped up on its last earnings, and held it for the most part. One tested the 50-day moving average while the market was pulling back. So you can see the relative strength line increasing during that period, relative strength at a new high along with price after the 18% move up today. So we bought that, starter position in that. We added to QLD, and we added to Tesla. Tesla, they have a Cybertruck event on Thursday near the close. Up on above average volume today, up 4.5%. So we added a little bit to that position. And then the Qs, when it undercut and reclaimed that pivot or that false breakdown, we added a little bit back to that today. So slight uptick in our adjusted exposure, a 1.83. Bottom line on the day 5 of a tight range, bulls and bears both tested. That's the top of the range and the bottom of the range on the NASDAQ and the S&P. Small mid caps underperformed. And now let's talk about stocks versus ETFs. So when we evaluate them, trying to make a determination when we see a sector moving, is there a sector ETF? And the question is, can that sector ETF, if it's just a one-time, can it outperform the stocks themselves? The answer is generally no if there's clear leadership. Then the question is there a leveraged product that can outperform the leaders? And in the case of gold and silver stocks, the answer is emphatically yes with NUGT. And the other question is, when you decide between a sector ETF and individual names, first of all, is there a clear leader? Now, there are 3 sectors that we normally use leveraged ETFs. Home builders with nail. They usually move in a pack, and it's never clear which one the leader is. Gold stocks, same situation. They move in a pack, hard to tell what the leader is. And energy stocks, NRGU has been a big winner for us, and it's tough to pick an individual name that's going to do 3 times what that big oil index is going to do. And I mentioned we went with Nugget, added to it. Actually, no, we didn't add to it. We took a 3% right out of the gate with this one, and that's what we're still holding. But here's NUGT. Now let's take a look at some of the leading, more liquid names, and there are not a ton of liquid names for us to buy. But here's GFI up 9% today. Very great day for that. Will it continue? Not sure. Gold, GOLD, up 5.25%. And AEM, these are really the 3 that we would be focused on as the leaders, and with volume up 5% today. So one of them basically in line with NUGT, the other 2 up half. We're really taking, and when I was showing GDX, when I started showing it last week, I was like, yeah, this is below the 200-day moving average, but the stocks that make it up are looking pretty good. And those 3 were what I was focused on. But going with Nugget, to get the leverage over a single stock that may or may not outperform. Don't want to buy 3 of them and spread the bets when Nugget will do just fine. So that was our decision on when to take a leveraged ETF, sector ETF, and when to go with individual names. And those are primarily the 3 sectors that we turn to ETFs for. Any other stocks that stand out? Okay, CrowdStrike, we reduced our position into earnings. After hours, it's down 1%, but the earnings report was just fine. Looking to add back to that today. I mentioned Zscaler yesterday was one of the reasons why this gap down, and very similar to what we saw. It was bought up virtually immediately, ended up on the day up 1%. So held the 21 EMA. That's where it was hanging around after hours yesterday. We didn't buy it, wanted to wait and see what CrowdStrike was going to do today. CrowdStrike holding up just fine. So we will be putting some more work back into that money to work back into that sector because it is a leading sector. And doing, what Palo Alto did also in its earnings report, initial gap down and now making new highs. So what else? Datadog acted well today, up. Let's see, where is Datadog on my list here? It disappeared. No, there it is, up 2%, making higher highs since we bought it. And let's see what else. On the downside, NVO, there was a study that came out that said Lilly's weight loss drug is better for just plain losing weight, never mind diabetes, versus NVO. So NVO down a little bit above average volume, still holding the 21. Lilly really didn't get much of a bounce today. Closing flat on the day, sitting right on this 21, but from a relative strength standpoint, it's really not doing its job. So not sure how much longer we're going to hold on to those when there's other names that are acting better. And with that, we're going to wrap it. As always, like to hear from you. The email is don@revereasset.com, or my partner Dan Stewart if you're interested in becoming a client, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. Our approach is named GROTECTION, to grow client accounts when the market is uptrending and protect them when the market is in a risky or weakening state. And with that, I'm going to wrap up the video for Tuesday, November 28th. This is Don Vandenbord with Revere Asset Management, telling it like it is.